name is Jordan Weir, and I'm the founder of StocksandOptionsGuru.com, shown here. In this video, I'll be comparing research in motion in Apple from a fundamental perspective, along the lines of this article right here, which you can find for more further information on my website. These were both massively popular companies before the recession hit, growing in leaps and bounds, but the recession has taken their stock prices down significantly. Is this an opportunity in disguise, or just another way to lose money in a bear market? Let's find out. So here I have Apple in this tab, and Research in Motion in this tab. I'll be using this to quickly go back and forth between them during this video. So let's start with Apple. You can see that it has a price-earnings ratio of 24-ish. 24. This is compared to Research in Motion's price ratio of about 23.27. Very, very similar. Once again, Apple at 23.53 and Research in Motion at 23.27. Pretty much the same number. Now let's look at their price to sales. Price to sales stands at 3.5 for Apple and 3.9 for Research in Motion. Once again, very, very similar. And finally, price to cash flow stands at 20.84 for Apple and 20.83 for Research in Motion. I've never seen two companies so close in terms of the valuation ratios, and that should make this analysis even more useful because we have some noise filtered out due to their striking similarities in that field. But really, the market bases stock prices off the earnings expectations in the future. How fast are these companies going to grow their earnings? So it's much more appropriate to look at growth rates instead. So I'm just going to scroll down to growth rates, and I'm going to do the same thing in Research in Motion. So let's look at Apple for a second. Apple's sales in the most recent quarter versus the quarter 1 year ago were 8.67% higher. This isn't bad at all. I mean, it's actually fairly impressive given we're in a recession. Now, the revenue growth comparing the last 12 months to the 12 months prior is also pretty impressive, sitting at about 18%. Given most companies are getting absolutely hammered sales-wise by this recession, this is a good sign of strength. Let's see how Research in Motion compares to those numbers. Wow. Now that's just amazing. Here's where I really become impressed. Both the quarter versus quarter and year versus year have revenue growth of about 84%. Right? Now this is just phenomenal, okay? It would be phenomenal even in a raging bull market, and in a bear market such as this one, when most companies are cutting costs and reducing workforces and expecting less sales. That is just amazing. An 84% increase. Now, with a company this size, that's almost unheard of. But so Research in Motion definitely gets the nod in terms of earnings growth or revenues growth. But let's look at earnings growth for a second. Now, their earnings per share in the most recent quarter versus the quarter 1 year ago for Apple was 15% higher, which is pretty impressive given the recession. If you look at the last 12 months versus the 12 months prior to that, it also sits at about 15%. Okay, how does Research in Motion compare? See, once again, they just blew Apple away. Now, most recent quarter versus a quarter ago, they're up 25% earnings-wise, and for the last 12 months, compared to the 12 months before that, year over year, they're up 46%. Now, once again, RIMM definitely trounced Apple on both these measures. Yet, it's not just earnings growth we have to look at. There are also other metrics to consider. For a fuller analysis of these two companies, check out their article on my website at www.stocksandoptionsguru. Once again, stocks and options, both plural, stocksandoptionsguru.com. Shown at the top right there. Well, and then just check out my article. Thanks for watching. Have a great day.